Welcome back, D-Traders. This week, top US companies reported upbeat corporate earnings. More reports are yet to come, but the market response will be subdued by the Fed's policy meeting that will take place next week. It means that the risk appetite will be dampened for a while. What sentiment is prevailing in the stock market on Friday, and what high-impact events will follow later? InstaForex analysts know all the answers. As expected, yesterday's New York trading session was unlucky for the stock market. The benchmark indexes looked solid gains, driven by the high-tech sector. The Dow Jones closed with a modest growth of 205 points, or 0.61%. The Nasdaq looked the strongest growth and climbed 200 points, or 1.76%. The S&P 500 also recovered by 1.10% to close at 4,060 points. The major stock indexes traded cautiously in the New York pre-market. They were able to extend growth later today. The intraday corridor for the S&P 500 is determined between 3,980 and 4,090 points. The reason behind high volatility yesterday was a series of macroeconomic data and mixed corporate reports. Tesla served as a catalyst for the growth on Wall Street. Its shares spiked by 11% in light of its financial records. Other high-tech giants quickly followed suit, propelling growth of the Nasdaq and the S&P 500. Chevron stock encouraged growth in the energy sector, tracking in the S&P 500, the oil giant announced that it would triple the budget for share buybacks. As a result, Chevron shares rose by 4.9%. Among weak performers were IBM, whose stocks lost 4.5% after the news on cutting its assets and the layoffs as a result of the failure to reach the revenue goal in 2022. Bed Bath & Beyond tumbled by 22.2% after the retailer received a default warning from the JP Morgan. Intel shed 6% because the company reported lower than expected revenue. Payment giants also presented their reports. MasterCard stock slipped by 1.3% in response to the market disappointment about the revenue forecast for 2023. On the other hand, Visa stock climbed by 2% because of an increase in quarterly profit amid steady consumer spending. Luxury fashion house Louis Vuitton discouraged traders. The company, which owns dozens of elite brands, reported that its sales expanded by 9% in the fourth quarter because buyers in Europe and the United States were eager to spend during Christmas. Still, sales were weaker than expected. Its shares first tumbled and later gained 0.6%. Almost all of the 11 sectors in the S&P 500 went up, except the consumer goods sector. The energy sector showed the biggest gains on the back of a rally in the oil prices. As for the economic calendar, some crucial reports proved that the US economy operated stronger than expected. Besides, the labor market remained tense despite massive layoffs. This gave food for thought both for optimists who think that an economic slowdown may soften the Fed's rhetoric, and also for pessimism who believe that economic growth is too robust for the moderation in the Fed's rate hikes. And today, investors are evaluating consumer activity. The data provided grounds for optimism. The core prices, excluding food and energy, rose by 0.3% in December, in line with the consensus, slightly up after a 0.2% increase last month. The annual rate, that is a preferred inflation barometer of the Federal Reserve, dipped to 4.4% from a 4.7% in December. Personnel spending fell by 0.2% on months, worse than the expected 0.1% downtick. Lower spending is recorded both for consumer goods and services, which is caused by the tight financial conditions. The sentiment on Wall Street is sensitive to a report by Chevron. The company reported a record high profit of $36.5 billion for 2022, and this figure is twice as big as the profit made a year ago, but it does not match well with estimates. The adjusted net profit of the second largest U.S. oil producer beat its previous record set in 2011, being $10 billion higher. The U.S. dollar index eventually climbed above 102 points, having added 0.12%. The greenback remains under pressure of the stock market's optimism and the consensus of a rate hike by 25 basis points. The US dollar is likely to trade in the intraday corridor between 101.20 and 102.30. The US dollar advanced on Friday, having rebounded from a multi-month loss against the euro and the pound sterling. Investors are now sitting on the sidelines of a policy meetings of major central banks. The Federal Reserve, the ECB, and the Bank of England are due to announce policy decisions next week. They have to revise monetary policies in the context of current inflation rates. Traders predict that the US Fed will raise the funds rate by 25 basis points on Wednesday. The ECB voted to increase the key policy rate by half of a percentage point. The Bank of England has to solve the task of curbing inflation without causing damage to the economy, which has already slipped into recession. The regulator is widely expected to raise the key interest rate by 50 basis points. The data by the US Central Bank revealed that the total money supply, designated as M2, declined by a record $147.4 billion in December to $21.2 trillion. St. Louis Fed President James Bullard said that a decline in the money supply is a precursor of a disinflation. It means that the US Fed will face a steady trend of easing inflationary pressure. Under such fundamentals, the US dollar is losing its luster even despite the evidence of the US economic resilience and the healthy labor market. The Canadian dollar strengthened to 1.3290 against its American rival yesterday. However, it retreated today to 1.3327. The intraday corridor for the USD card pair is seen between 1.3260 and 1.3370. A rally in the oil market and some weakness in the greenback helped the loonie to stay afloat. Oil prices have been growing for the second day straight because of a stronger than expected GDP growth in the United States. Brent crude gained 0.9% to trade at $88.28 a barrel. WTI approached by 1.1%. Both benchmark rates are set to close on a Friday with the weekly gains for the third week in a row. OPEC and its allies will assemble next week to discuss oil output rates. According to insider sources, major oil producers are unlikely to update quotes. COVID cases in China fell by more than 70% from the peak readings. It proves that the Chinese economy is getting back on track, boosting a recovery in oil demand. Bitcoin is making efforts to settle above $23,600, and yesterday the token made a successful jump that was followed by a slide. Today the crypto is trading slightly below 23,000. Popular altcoins are trading lower. Ongoing price moves are driven by technical reasons because investors are fixing profits. As for the intraday outlook for Bitcoin, it's likely to trade within the corridor between $22,800 and $23,800. As expected, yesterday's New York trading session was lucky for the stock market. The benchmark indexes looked solid gains driven by the high-tech sector.